In the fast-evolving world of finance, machine learning is transforming wealth management like never before. Gone are the days of relying solely on human intuition. AI-driven algorithms now analyze vast data sets, predict market trends, and personalize investment strategies with precision. From robo-advisors to fraud detection, machine learning is reshaping how wealth is built and protected. In this video, we'll explore how AI is revolutionizing the financial landscape, making smarter, faster decisions. The AI takeover. In 2024, David Carter, a seasoned investor from New York, watched his traditional portfolio struggle. Meanwhile, AI-powered systems like WealthGPT were outperforming even the best fund managers. Unlike humans, AI never sleeps. It analyzes millions of data points in seconds, spotting market trends before they unfold. Major firms like Goldman Sachs and JP Morgan now use AI for precision trading, fraud detection, and personalized investment plans. Robo-advisors such as Betterment and Wealthfront have already helped manage over $50 billion, proving that AI isn't just a trend, it's the future. By 2030, experts predict that 80% of financial decisions will be influenced by AI. The question is no longer if AI will dominate wealth management, but how soon you'll embrace it. Will you trust AI with your money or risk being left behind? From gut feeling to data-driven. In 2025, Wall Street veteran Michael Reynolds faced a tough decision. For years, he relied on instinct and market experience to manage his clients' wealth. But with AI-driven investment tools like BlackRock's Aladdin analyzing trillions of dollars daily, he knew the game had changed. Machine learning models process decades of financial data in seconds, eliminating emotional bias and human error. AI tracks economic shifts, predicts downturns, and adjusts portfolios before most investors even react. Firms like Morgan Stanley now offer AI-assisted financial planning, ensuring hyper-personalized strategies for clients. By 2027, reports suggest that 90% of hedge funds will incorporate AI into their trading strategies. The data doesn't lie. AI consistently outperforms traditional methods. Investors who trust machine learning are seeing higher returns, lower risks, and smarter decisions. The question is, will you adapt, or will you be left behind in an AI-driven financial revolution? Robo-advisors versus human experts. In 2026, Jessica Collins, a 35-year-old entrepreneur from San Francisco, faced a dilemma. Should she trust a human financial advisor or go fully digital with a robo-advisor? Traditional advisors offer personal experience, but AI-powered platforms like Betterment, Wealthfront, and Fidelity Go provide automated, data-driven investment strategies at a fraction of the cost. Robo-advisors use advanced machine learning to analyze market trends, risk factors, and portfolio performance in real time. Unlike human advisors, they don't charge 1 to 2% fees. Instead, they offer precise recommendations for as low as 0.25% annually. In just a few years, these AI tools have already managed over $1 trillion in assets. However, some argue that AI lacks emotional intelligence. Can an algorithm understand market panic like a seasoned investor? By 2030, financial experts predict a hybrid approach, where AI handles data analysis while humans provide strategic insights. One thing is certain, the battle between man and machine is just getting started. The secret behind AI-powered personalized investment strategies. In 2028, Daniel Thompson, a 40-year-old professional from Chicago, was frustrated with generic investment plans. That changed when he switched to Wealth AI, an advanced robo-advisor that analyzed his income, spending habits, risk tolerance, and long-term goals to build a strategy just for him. Unlike traditional advisors who offer broad recommendations, AI uses real-time data, market conditions, and behavioral analytics to tailor investments for each individual. Platforms like Vanguard Digital Advisor and Schwab Intelligent Portfolios track spending patterns, adjust risk levels, and even optimize tax efficiency, all without human intervention. By 2030, experts predict that 95% of personalized portfolios will be managed by AI, adapting instantly to market changes. No more outdated one-size-fits-all strategies. Machine learning ensures your investments evolve with you. The future of wealth management isn't just smart, it's custom built for every investor. Are you ready to let AI design your financial success? Risk Management Reimagined. In 2029, a sudden market downturn wiped out $500 billion in investments, but Emma Richardson, a tech-savvy investor from Los Angeles, barely lost a dime. Her AI-powered portfolio, managed by Shield Invest AI, had already detected early warning signs and automatically adjusted her assets to safer options. AI-driven risk management tools analyze global economic shifts, political instability, and even consumer behavior in real time. Unlike human advisors, they don't react after a crisis. They predict and prevent losses before they happen. Platforms like BlackRock's Aladdin use machine learning to simulate thousands of economic scenarios, helping investors make the safest choices. By 2032, financial analysts predict AI will reduce investment losses by 40%, making wealth protection smarter and more efficient. Whether it's detecting fraud, avoiding volatile stocks, or hedging against inflation, AI ensures your money stays safe and growing. The future of risk management isn't reactive, it's proactive, AI-powered, and always one step ahead. The future of investing. By 2030, AI-powered investment platforms manage over $10 trillion in global assets. With machine learning algorithms making split-second decisions, investors like Robert Miller, a 50-year-old executive from Houston, wonder, are human financial advisors becoming obsolete? AI-driven platforms like Wealthfront, Betterment, and Fidelity Go offer personalized investment strategies, real-time risk assessment, and tax optimization, all without human bias. These systems analyze millions of financial patterns daily, ensuring more accurate and efficient investment decisions. However, human advisors still hold an edge in emotional intelligence and long-term planning. While AI can crunch data, it doesn't fully grasp complex life events like inheritance, career shifts, or personal goals. Experts predict a hybrid model by 2035, where AI handles data and automation, while human advisors provide strategic guidance. How you can leverage AI for smarter, more profitable investments. In 2031, AI-driven investing is no longer a luxury, it's a necessity. Sarah Johnson, a 38-year-old entrepreneur from Miami, boosted her portfolio returns by 30% using AI-powered platforms like WealthGPT and Bloomberg AI. These tools analyze market trends, risk factors, and global events in real time, ensuring smarter investment decisions. By integrating AI, investors can automate trades, predict downturns, and optimize tax strategies. Experts predict that by 2035, 85% of retail investors will rely on AI-driven insights. The key to wealth isn't just investing. It's using AI to invest smarter and stay ahead of the game. AI is no longer the future of wealth management, it's the present. With data-driven insights, risk prediction, and automation, AI is revolutionizing investing.